Pra-pa-pa-pa, ching, 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 ching. Good morning, good afternoon, good evening, everybody. Welcome to the pre-market show. And we have about 10 seconds or so until we get this CPI number. We have top left is S&P, top right is Bitcoin, got gold here, and the NASDAQ. Let's see what the reaction is. It's been a lot of build-up going into this CPI number. Looks like Bitcoin's moving higher. S&P is moving back above the previous close here. And so far, looks like we're seeing some dollar weakness and some moves into Bitcoin, NASDAQ, and S&P. Looks like the number was 2.4%. compared to 2.5% for the year-over-year headline number. So we can dive in deeper a little bit later on, but looks like consumer price index year-over-year headline number was 2.4% compared to the expected 2.5%. And so far, we're seeing a bit of a bid. Prices starting to move a little bit higher. All right. I think I need to send the link to Andrew. I may have not sent him the link. Let's see. I'm going to just put on a little bit of some music in the background. Let's put on something like this. All right. Okay. And yeah, let's see here. I think it's all about CPI today, really and truly. We'll probably get a chance to talk to you a bit about the questions that you have, some of the live chat. We know that people do spend a lot of time looking at different assets, so we won't just focus on S&P today. We'll look at some gold. Also, feel free to post in the live chat. Let us know if there's anything in particular that you are looking at today, and we'll be happy to kind of take a look at that and dive deep into that. All right, so in the meantime, in between time, I'm going to leave the chart up so you can see how things are moving. Not really a big move. And I think there was so much pent-up energy here where everybody and their grandmother were waiting for this CPI data, and it's fairly muted. Not much going on at all. Okay. Let's see who we got in the live chat. We got quite a few people in the live chat, so thank you everybody for joining us today. Friday the 13th. Today's going to be a good day. All right, let's see if we do. Yeah, so it looks like the month over month came in at 0.3% as well. So fairly in line with the expectations that the economists or analysts were expecting. Fairly much in line. Here we go. So if we're looking here at the three main data points, as I try and get my WhatsApp set up to send Andrew the link. All right, here we go. So this was what everybody was waiting for this week. So core month over month came in right in line, 0.3. The month over month came in at 0.2, so slightly cooler. And the year over year came in cooler. Coming in cool is what it's about. And yeah, no real reaction. I mean, I'm still waiting. It's not really looking like it. All right, here we go. Andrew says, send me the link. There you go. So decided to go for a nice little walk before the show, and then was doing some scrambling around to try and get on. And so just seeing your message now, Andrew, my apologies. My apologies for that, Andrew. All right. looks like it wants to move higher here, but we're just observing from the sidelines. If we go into an individual chart, we'll break it down one by one. Here we go. Okay, so this is Bitcoin. Definitely stronger after that cool CPI, but not massively so. I think we can dive into this in a little bit, but I do think that it's going to take a little bit of a serious concerted effort to get Bitcoin back above 70,000. We hit a low here, would have been like a 2-year low, 2.5-year low, just about 60,000 exactly. Right now, we're sitting at 67,000. So it could be one of those days where it takes a little while to get the engine warmed up, and as we get the New York Open in about an hour, we start to see the momentum slowly but surely increase. Okay. All right. So we're dealing with a couple things here today. Where I think the main thing that we wanted to make sure that we were on for was to catch the 130 GMT inflation number, and I don't think people were expecting it to come in better than expected. So let's see. It's actually also lower than the previous month. Previous month was 2.7. The forecast was for 2.5, and it was actually 2.4. So definitely a trending lower CPI. And this is kind of giving us an idea of the last few years, how high it has been. And it's definitely looks like it's under control. So I think the thinking process now is, with inflation not an issue or cooling off, the Federal Reserve will be more likely to reduce interest rates at their next meeting. And that tends to be something that gets investors and traders interested in taking more risks when there are lower interest rates. So that's kind of like the chain reaction. Lower inflation than expected, or at least inflation under control. The Federal Reserve gets the all clear to continue to cut interest rates. And then lastly, but not leastly, investors feel like they can put some more money to work in the markets. All right, so Andrew will be on shortly. Let's see. Actually, let's see. Yeah. We'll see if he is able to join in a little bit. But you are watching the pre-market show. We do these shows each and every Thursday and Friday. We're actually going to be giving away an account for $5,000. So if you're interested in getting an account for $5,000, have a look in the description. Actually, have a look in the live chat. There will be a link for you to enter your name into a form, and that form will allow you to be entered into the live draw, which is a random selection of one name for $5,000. All right. So it looks like we got Jalen in the house. Coin earnings. I heard something about coin earnings. I heard that the coin earnings were atrocious. They had terrible earnings. I didn't actually follow up with it. But thank you, Jalen, for highlighting this. I'm going to have a look at it now, actually, now that you mention it. Okay, here we go. So Coinbase, for those of you who are not familiar with Coinbase, is a crypto exchange. And they announced earnings. I intentionally steered clear of it. Oh, it's actually up. Okay, so it was down 7% yesterday. Let's see. Because I feel like they announced earnings yesterday. Let's get this right. Okay, so they announced earnings last night. Yes, they were down 8% yesterday, and now they're up 8% today. or 9% today. So that's right. Jalen, let us know. Did you actually participate in the Coinbase earnings? Out of curiosity, it's not been performing that great this year. Looks like it's very highly correlated to the price of Bitcoin, which is at a 2.5-year low. So this could be maybe a little bright spark based off of earnings. Looks like earnings came out worse than expected. And the price in pre-market is up over 9%. So that's the joys of trading earnings. You could get the worst report ever, and the price shoots up 9% in pre-market. And that's why I think it's very important that you have a trusted and tested process when you trade earnings, and you're not just throwing darts at a dart board. Even if you would have known that the earnings results were abysmal, you probably would have gone short, and in this case, you probably would have been on the wrong side of this trade. So yeah, it looks like it's up. I was looking at it yesterday. So the initial move was down. That's what I saw. Looks like it went down an additional, well, it went down to 130 something, 132 after 120 something after pre-market, after hours, and then it's bounced back since then. So yeah, interesting to see crypto, and I think today could be one of those pivotal days. We do have a bank holiday on Monday for the observance of President's Day. So I'm going to take the day and go with my lovely wife on a adventure and not look at a single chart or a single stocks markets related thing for the day. It's nice to have a little bit of a break. There aren't many days when markets are closed in the US and everything's still open in London and in the UK. So taking full advantage of that this week. But if you are trading today, or if you do have any highly risky or leveraged positions on going into the close today, just be reminded that you will not be able to exit those on Monday. So be prepared and be positioned for a 3-day weekend in terms of markets. And that's the important thing. As long as you're prepared, that's all that matters. Okay, looks like Andrew's not going to be able to make it on. And that is my fault, completely my fault. I was leaving everything to the last minute, as always. That's how it goes. So let's have a look at some of the charts here. Let us know if you are trading today or watching anything today. We have Mir Sabir. Hello there, Mir Sabir. Let us know if you are trading today. I think if my memory serves me correctly, in the past you've talked about Forex and trading different currencies. But if there is anything in particular that you're watching today, let us know, and we'll be happy to go through it. All right. Okay. You know what we'll do? We're gonna do a quick intermission, and we'll be back in about a minute or two. We'll see you right back right after this. All right, we are back, and we are in action. We're ready. We're ready for this day. So, I know some people are superstitious about Friday the 13th, or various sort of superstitions that people have. So, just out of curiosity, for those of you who are watching us today live, are there any superstitions that you have? Is there anything that you don't do or you do on certain trading days to kind of keep that energy going, keep you in a good state of mind? I'll start it off by sharing one of my superstitions, which is I prefer, or I don't like to wear red when I'm trading, because I associate red with a negative profit and loss. So that's one of my things. I actively try not to wear red. So much so I would happily wear red on the weekend, but when it comes to like a day where I know that I'm going to be placing a trade, I will not wear red, not even red socks, nothing at all red. So that's my sort of superstitious ism. If you have any, let us know. All right, next up, we'll have a look at some charts. We have a market that is not moving at all, and I find this hilarious that everybody has been talking about CPI, and this is going to be the announcement. I'm in a few groups, and there was this strategy that was sent out by about 20 different Instagram posters, Instagram influencers, and they were all saying basically that the market is going to move so much after CPI, and they're going to make so much money, and this is the strategy. You go long above this point, you go short above this point, and the price has not moved one point. So if you would have tried that strategy, it definitely would not have been working yet. Still got another 45 minutes until US markets open. And then we have the whole day, the whole Friday the 13th for things to unfold. But I just find it hilarious when there's so much built up anticipation for something and the opposite happens. So just another example. Just another example. All right, so let's start off with, looks like we have a request here for the US dollar. So interestingly, the US dollar is it's very, very pivotal in the sense that it's what's used to measure gold, silver, all the currencies. So yen, pound, Aussie, Swiss franc, you name it, they're all paired up against the dollar. And interestingly, the dollar has been weaker this year. It's moved down this year. And I think it is partially due to the philosophy or the goals of the Trump administration to try and weaken the dollar to help them with international trade, because a weaker dollar makes things a lot more favorable for them on the international stage. So if we zoom out, this is the last 12 months of the dollar. It's down about 10%. And as the dollar weakens, obviously we'll see other currencies, we'll see commodities increase as they're inversely correlated. If we're thinking about the rest of 2026, or going between now and the summer, I do think that there is the potential for what started this year and what's been developing over the last 12 months to continue. I think the narrative has also been for international investors to cash in some of their dollar weighted positioning and to basically exit their dollar holdings, or reduce at the very least their dollar holdings. So last week we actually hit a 3-year low in the dollar, and now we are just slightly above that at the moment. So I kind of want to keep an eye on this for the next show, because if the dollar does continue to move lower, then I think as a result, we will see the appreciation of things like gold and silver in the coming months. So that's something that I want to keep on the radar for our next show going into the middle of February. We also have next week the what's it called? OPEX, so options expiration, is taking place next week Friday. So just a reminder there, that usually can be quite a difficult week to trade. All right, next up, let's have a look at gold. Here we go. Let's use a naked one there. Okay. Okay, I think this is the one that we used last week. So gold, it hit a monstrous all-time high here. This was end of January, hitting almost 5,600 for the ounce. And then there was this massive sell-off that I think most people knew about. I was getting messages from people that never speak about markets saying, have you seen this bloodbath in gold and silver? And then all of a sudden, we've come back halfway to the halfway mark between where we were at the end of January at the all-time highs to the lows of what was, I guess, considered a mini crash in February. So in this sort of middle ground here, I think the next few weeks are going to be key. I think 5,000 has always been a target. That was one of the targets that were mentioned for the end of year. At the end of year 2025, quite a few analysts were calling for gold to finish the year at 5,000, and we're already there. We're only 2 months in to the year. So that's where we're sitting right now. Currently 4,977. So I think the next key frontier for gold is going to be if we can get back above 5,000. And then I think the next sort of target would be somewhere around 5,600. That's the all-time high that we hit on Thursday, the 29th of January of this year. All right, looks like we got Chubb Capital. Gold is not moving at all, but I think a strong sell move is cooking. I just can't see the price going bullish if you check the price action on the daily. All right, thank you very much. Thank you, Chubb Capital. All right, so there has been a lot of volatility in gold. If you go back just a few weeks, volatility was really picking up end of January. And then we got that big sharp move lower. So yeah, it's definitely in a bit of a consolidation phase. But if you kind of put it into perspective here, pretty much from August 29th of 2025 until January 29th of 2026, it's going straight up. So there's been some massive moves in gold. And as we all know, markets don't move every day. They definitely don't go up every single day. And gold is taking a bit of a breather here after what was essentially a 6-month rip-roaring rally, 6 months straight with very few pullbacks here to an all-time high just shy of 5,600. So we're going to stick with our outlook. I think 5,000 is key. And today, now that we have the certainty about the CPI data, we know that it's slightly cooler, coming in cool. Now we can see how the market digests that information and moves after that. Thank you very much. Thank you very much, Chubb Capital, for your post. All right, we're going to wrap this show up in a minute. I think I'm forgetting something. Yeah, we're not going to do the prize giveaway today, but we are going to remind you that we have an investing masterclass which is going to be taking place this coming Tuesday. The topic is options trading. So if you're interested in that, just click or actually scan the QR code in the top left of your screen right now. If you are unable to scan that because you're on a phone, feel free to have a look in the description to this video. There is a link to the Investor Masterclass. We also have launched our WAP. So if you'd like to get daily videos and daily insights from us, please feel free to join our WAP. The link is also in the description to this video. Directly below this video, you can have a look in the description. You can find a link to the Investor Masterclass and also the WAP platform. So please feel free to do just that. All right. So thanks everybody for watching. Mir Sabir, Grub Capital. We also had Jalen looking at coin earnings. I still am curious whether or not you got in on any coin earnings. Jalen, let us know. That's it from us. It's been a good day. And whatever you do today, remember it is Capital Preservation Friday. Capital Preservation Friday. What is Capital Preservation Friday? It's where we preserve our capital. We've worked hard this week, and whether or not you've had some profits or some expenses, there's no good that can come out of overtrading today, breaking your rules today, getting overly emotional today when it comes to trading. So it's just a reminder that our job is to grow our accounts, and in doing so, we're protecting what we have. Have a wonderful Friday the 13th, everybody. We'll be back again next week, Thursday, to do it all again. We do read all your comments, and we do take on board your feedback. We ended up having a investor trader of crypto yesterday, good friend of mine, Shannon Thompson. And that came out of receiving feedback from you that you wanted to hear from other traders. You wanted to get different perspectives. You wanted to get some different strategies from other traders who are successful. So every month we're going to bring on a new trader, and for this month we had Shannon Thompson yesterday. So check out that link. We'll put it right there up in the corner if you want to have a look at Shannon's interview from yesterday. From all of us here at Signature FX, and also on behalf of City Traders Imperium, I want to say be safe today. No need to break any records, and happy Capital Preservation Friday. Take care, everyone.